Derek is?
Yep. Following in Raymond's footsteps.
Great. I feel sorry for him. I feel sorry for
I did,
him.
I don't recall him wishing condolences.
Yeah. Well, good morning, everyone. It is 10 o'clock, so I will call the March 13th, 2025 meeting of the Oklahoma City Employee Retirement System to order. Item number 2 on our agenda this morning is to approve the minutes of the meeting of February 13th, 2025. Have a motion and a second. Please record your vote.
Maybe the next one.
There we go. Item is approved. Item number 3 is the consent docket. We have 5 items we can take with one motion. We have a motion and a second. Please record your vote. Item is approved. Item 4 is to ratify approvals. We have a motion and a second. Please record your vote. Item is approved. Item number 5 is to approve the claims docket. We have a motion and a second. Please record your vote. Item is approved. Item 6 this morning is to approve applications for service retirement. We have a motion and a second. Please record your vote. Item is approved. Item 7 is approved continuation of pension to spouse. We have a motion and a second. Please record your vote.
He said yes. Oh, it's her. Oh, sorry.
Item is approved. Item 8, receive report of death, authorize payment of the $5,000 death benefit, and authorize secretary to make changes to conform on the following. You have a motion and a second. Please record your vote. Item is approved. Item 9 is receive report of death, authorize secretary to make necessary changes to conform on the following. We have a motion and a second. Please record your vote.
problem, John.
Item is approved. Okay. Item 10 is items for individual consideration. Item 10A is approval of sending attendees to the International Foundation for Employee Benefit Plans training program to pursue the Public Plan Trustees Institute, July 15th and 16th, 2025 in Chicago, Illinois. We have a motion and a second. Please record your vote. Item is approved. Item 10B is approve the updated Board of Trustees of the Oklahoma City Employee Retirement System election guidelines. I have a motion and a second. Please record your vote. Item is approved. And item 10C is to approve the investment policy statement. Asked Jason to kind of give us a high-level overview of what the changes are that are proposed. Good morning.
Morning. So I know it looks daunting with a lot of red lines, but it's pretty minimal changes. Effectively, I don't know if you can pull it up, but the substantive change is here in the target allocation guidelines, as we've replaced WAM, Western Asset Management, which was technically a Core Plus strategy, and Brandywine, the global bond manager, with a single multi-sector manager and Pioneer. We're just reflecting that in the guidelines. Effectively, your target asset allocation isn't changing. We're just renaming what those two are because it's consolidated. And then the other changes are the elimination of the manager-specific guidelines for strategies you no longer have. So long-short equity, we didn't eliminate this last year because it was still winding down. It's pretty much completely wound down now. So we're just removing these guidelines, which don't apply to anything at this point. The same with the Core Plus. This was Western. You really had a separately managed account with specific guidelines to you. So this was guidelines for Western. This is being removed. The same with global bonds. You no longer have the global bond manager. So just eliminating. And then more generic multi-sector, because you're in a commingled fund, more generic guidelines that match up with others. And I believe that is it. Looks like a lot of red, but it's more just cleanup to make it consistent with what we're doing today.
Does anyone have any questions on the updates? Okay, hearing none, Chair will entertain a motion to approve item 10C. Have a motion and a second. Please record your vote.
You nodded yes.
Item is approved. Okay, item number 11A is the monthly investment report.
Okay, thank you. So we have the market snapshot here on the screen. Really what we've seen year to date is valuations coming in. We've had on our relative valuation chart here in the middle that U.S. large cap has been expensive for a while. Not necessarily a predictor of what the performance is going to be on a go-forward basis, but we certainly know the last 2 years where we've seen the S&P 500 up over 20%, well above historical averages. The valuation or the PE of U.S. large cap stocks significantly above the trailing 15-year average, really driven by those Magnificent Seven stocks. I don't have the chart here, but we created it's pretty interesting where you see the rank of the Magnificent Seven stocks in terms of performance within the 500 over the last 2 years. Not surprisingly, NVIDIA is number one. The other 6 stocks are in the top 100 or the top 20% of the performers in the S&P 500 over the last 2 years. If we look at the first quarter of this year, those 7 stocks are all in the bottom 100 performers of the index, with Tesla actually being the 502nd stock in the S&P 500 as stocks have moved in and out, so the worst performer year to date. So somewhat of a right sizing. We've seen in total now through yesterday, the S&P 500 is down 4.5%. It's not surprising to see corrections in markets. There's a lot of volatility being introduced as a result of ongoing tariff and trade wars that tend to introduce a lot of volatility when they're happening, but longer term, as we've seen historically, longer term, it doesn't have as great an impact as it seems it could while it's going on. Inflation numbers have come in relatively in line with expectations. Yesterday, PPI was right about where expected, and today CPI came in a little bit under what was expected. So the one thing we have seen is not the areas of the market outside of the U.S. and within fixed income and other asset classes starting to rebound a bit. Year to date, you see here through the end of February, the MSCI EAFE, or non-U.S. developed markets, up 7.3%. That's through the end of February, where the S&P is up 1.4%. Actually, if we carry that through mid-March, now through yesterday, international or EAFE is up about 8.8%, and S&P 500 is down 4.5%. So close to a 13% differential between non-U.S. and U.S. And I point that out because it's very difficult to stick with diversification over a period of time when one thing is really driving the market. But it's important to recognize that, and stick to that strategic allocation plan, knowing that markets are going to cycle over time. How that's driven through into your portfolio, we'll see from a target allocation standpoint. At the broad asset class level, we're pretty much in line with targets, a little bit overweight to equities, pretty much in line with fixed income and real assets, a little bit of cash that we keep for operating needs, benefit payments, and capital calls and private equity. The overweight to large cap, it is a pretty significant overweight, but that's pretty much the underweight to private equity. You'll see your private equity target at 15 and your private equity current allocation at 9.6. That's because we have increased the target allocation to private equity over time, and it takes a while to get to that target. So we're keeping that underallocated portion of private equity within large cap. It's not to say that we just we've continued to let large cap run as it's been going up. We reduce risk by raising pretty much all operating needs for cash needs for benefit payments have been sourced from large cap over the last probably 18 to 24 months, a majority of that. So we're continually taking down risk relative to targets, not just letting that run up, but it's continued to be a little bit overweight. Real assets about in line there. I think at the next meeting, we'd like to come back and do a private equity review and private real estate review. We haven't done that in some time. I don't anticipate we'll have recommendations at this time. It's the pipeline for the year, but coming in the latter part of the year, we will have some recommendations. On a relative performance basis, a little bit shaky look here as we're looking at the end of February, One of the things that has hurt, and it's really this 1 month return, as we saw volatility pick up in the first 2 months of the year, particularly in the U.S. and particularly in growth. Your small cap portfolio down 7% versus the Russell 2500 down 4.7%. Growth was really hurt in the month. Growth stocks sold off not just in large cap, but in small cap, and smaller cap, micro cap sold off a little bit more in the month. Silvercrest had a difficult month, and Earnest, while it is a relative value manager, they're not holding some of the deeper value names that typically protect a little bit more when growth sells off and value outperforms. So that combination really was kind of a double whammy and headwind in the month that's impacting the 1 year return. Overall, your large cap on a 1 year basis up 18.4%. We're passive there. Private equity, you see starting to turn the corner now, where this was flat returns on a 1 year basis. Now we're up about 8%. I will say, as we look at different client portfolios, you're starting to see that number really jump up, and there's some big differentials. A lot of that has to do with timing of when you get valuation updates. So most of that number is reported valuation adjustments through the end of September of 2024. As we get year-end valuations from your private equity fund managers, we're starting to see these tick up a bit, and we're expecting to see that number bump up a bit. Within emerging markets, the thing that hurt there is really the small cap, the Wasatch piece in the month being down, and that was a pretty big headwind. So overall, on a 1 year basis, up 7%. Behind that policy index, really small cap and EM a little bit. As we look, we know different points in time are fairly challenging. Over the long term, we're in line with policy benchmarks, and individual managers are performing in line with expectations. WAMCO, the transition from WAMCO was occurring right at the end of the month, and that did have a slight impact at the end of the month of about 20 basis points or so. That is almost fully completed. You'll see here, we've had to do this in a couple of tranches because Western did have some derivative contracts that were expiring in March, so they had to keep a little bit of cash in that portfolio for those to settle. We expect that to be fully liquidated and transitioned to Pioneer at the beginning of April. So you can see $97 million was funded into Pioneer on the last day of the month. That's why there's no performance there. There's still a little bit in Western here at this time. So going forward, I think probably need to get back to a review of some managers. It's been some time. I think the small cap managers, it would be a good time to have the two of them come in. Maybe we can do that, as well as a private equity and private real estate review at the next meeting.
That'd be great. Anyone have any questions this morning for Jason? Okay. Hearing none, Chair will entertain a motion to receive the investment consultant report on item 11A. Have a motion and a second. Please record your vote. Item is approved. Item number 12 is comments from board, staff, and citizens. Nothing for the good of the cause this morning? Okay then. We are adjourned at 10:19. Thank you, everyone.